Hello traders, Damien here. Welcome to another post-session review. Today's Friday, September 6th, and we had another one of these losing days. It's getting a little old having all these losing days, but it's part of the process. We'll get through it. We had back-to-back failures today, and we'll get to the chart in a minute, but we had a $480 hit today, $480 hit, $2,327.95. $2,327.95. We are penny for penny matching up here, and yeah, I know it gets frustrating. We have all these losing days. We have raggedy order flow, but we'll catch them. We'll catch them and turn this around. So today we had expectation, higher lows, new structure highs, higher lows, new structure high. Very nice market, very deep corrections, which was a sign that we had significant breakdown in order flow. The market as a whole is in exhaustion territory in the longer term. Nonetheless, the market was still providing new structure highs. This was our main swing here. We had a very deep correction followed by a retest, followed by some more complex corrections. So we had a rotation down here, very nice, in an area of good buying, good buying, good buying, good buying here. So I felt good about the risk reward, which was fantastic on this swing here, but it turned out to be an expectation failure. My stop was right below the main swing, which was this at this point, and the market came down making a new structure low. So I was started looking for shorts, and I was looking for a trade in this general area. We had an expensive rotation which I took. Stop was all the way up here, which yeah, sucked from a risk standpoint, but the reward was there. And then the market had a complex correction here, came down. So at first it moved around in favor quite a bit, and then it moved against me a little bit, and then it moved in favor quite a bit here. It looks like the buyers found some support around here where they had come in before. That was okay, and then we had a complex correction. So immediately when you have a complex correction, you're thinking, okay, harmonic, what's happening? Where is my point D, if there even is one, so that I can average into my trade or rescue my trade? Okay, so entering here and the market coming down to here to the 6.2, and then coming back up to the 127, okay, extension of the A to B. We have a Gartley pattern that completed in this area. This is a price reversal zone for the Gartley pattern, and the price came a little bit higher. As price interacted with the candle high here, it triggered the the graceful exit on rescue mission. I was not in a position to average in a better trade, or I would have been able to get out of this. Our account does not permit that, but my entry, as you can see, was here at this level. As we can see, price did come back off of that Gartley to the break even of the pattern, and I did not get it closed below my entrance. It did come down. I was up about 3 or 4 points, and then it came back, so it never closed to trigger the trail, which was unfortunate, and the market came up and eventually took me out for a nice hefty hit. Okay, so that was the two trades that I had today. We had really raggedy order flow, really choppy market, both sides trying to kill each other. Okay, but ultimately the bulls ended up winning, and the two trades that I did have were beautiful entries, but turned out to be expectation failures. And the risk reward was good on this one, not so good on this one. It was a significant risk, but we had a significant possible reward as well. Looking for price to get all the way down here from the original entry was really would have been a really nice run, but nonetheless, that's the way the cookie crumbles. That's why we keep executing and keep deploying our money management, so we can continue to fight until we eventually can find and string some winners here. I think we're long overdue for some winners. We'll see how it turns out next week. What I may do is I may get even more aggressive with the immediate order flow. Same trade plan, same everything, but trade the immediate order flow more aggressively so I can get some more frequency and maybe string some shorter term, smaller winners, and capitalize on a lot of those quick trades. So we'll see that next week, and focus on the more of the immediate order flow, and and take some of that prevailing order flow that tends to play out over and over again on a smaller scale, and see if we can control a little bit of the risk, and take some quick points and put them in the bank so we can grow the account. Remember, we're not changing anything, we're not scalping, we're not doing anything. What we're going to do is not because of the risk, because I mean we've been back to this area numerous times, and but I'd like to work on some of these smaller swings and get aggressive with them, so that I can trade them just like we trade the intraday order flow, but maybe we can get a little more frequency, so that we do get some failures, we can also take some winners as well. So we'll see how that plays out. We will stay on this chart, but we're going to get more aggressive with the more immediate order flow. Okay, we're going to target that next week and see if we can get a little more frequency, and a little more start stringing some of these winners, and hopefully turn this around. If not, we'll keep pressing on until we can't press on anymore. But it's unusual for to struggle this way, and it's not the trade plan, it's not the decision making, is just a crappy market that we're dealing with these days that have extended swings, and these swings are providing, when we do have the losses, they also weigh heavily, as well as the gain. And unfortunately, we've been stringing more losers than we have winners, which kind of have us in this perpetual muddy state. But again, a credit to the system, a credit to the money management. Look how many days we've been trading, look how hard we've been struggling, and we're still in the capacity to fight and keep fighting. Now more than ever, the emotions have to be under control, the trade plan has to be followed. Nothing's changed. So when you hear me say that we're going to target the immediate order flow, it's not from a risk standpoint, it's not from a reward standpoint, it's not to recover faster, it's just to get a little more frequency, to get to the expectancy. We're not having a lot of frequency here because of these swings, and because of that, we're also taking the market tends to be very choppy, which tends to lead towards more expectation failures, and we seem to be catching a lot of those lately. So by scaling into the more immediate order flow, we'll pick up on that frequency and hopefully catch more winners and losers. And because of that, since the risk reward favors our winners and not our losers, that will help us get back to growing our account. Okay, that is the focus. It's not to recover the account, it's not to make up for the losses. Our purpose is to grow our account, and if we keep that in the forefront of our minds, then we don't let the emotions come in to help us steer and make decisions for us. All right, guys, happy Friday. It's been a tough week, but next week we will be positive, and we will continue to dig in here and fight. Remember, there's a live stream next Wednesday, and we might do a second stream on Thursday or Friday to talk about more about structure analysis and order flow analysis, and that combining of the two. We may do that, may not. We'll see how things go. I'm also going to target those two concepts in the live stream. I hope you guys are thoroughly enjoying this trading and this recap every day, and this 5K challenge. It is indeed a challenge with these volatile markets, but we're doing okay. We're not doing fantastic, but we're fighting, and while we can still fight, that we will continue to have fun, win, lose, or draw. Have a great day, have a great weekend, and thank you all for the support and for following us. Thank you very much. Bye.